Let's welcome in Jill Carey Hall, U.S. equity strategist and head of U.S. small and mid-cap strategy at BofA Global Research, Bank of America Global Research, that is. Jill, it's good to see you. We will not ask you about Litecoin here this morning. Rather, Brian and I have been sort of discussing the change in tone for many on Wall Street, the sort of pivot to a more cautious tone. And I'm curious for your team at Bank of America, how you've sort of been coming to that view, because you guys just cut your S&P 500 forecast.
Yeah, so we've been one of the more cautious strategy teams on the market with regard to the level of the S&P 500. We recently just revised up, actually upward our 2021 year-end target and launched a 2022 year-end target for the S&P. So for year-end 2021, we are still expecting the market to end the year lower than current levels. So we have a 4250 target on the S&P 500 for year-end. Obviously, earnings have come in very strongly for the first half, much better than expected, and we're still bullish on U.S. economic growth. But we think a lot of the good news has been reflected in valuations at this point, which are very stretched, particularly for a lot of the large and mega cap stocks within the market. And sentiment has been close to euphoric. Our survey of other Wall Street strategists and what they're recommending you put into equities in a balanced fund has been at levels that, by our measures, is pretty close to a sell signal. It's still in neutral territory, but we're getting pretty close to levels that would suggest more caution on the market. So, so far so good this earnings season, also with respect to margins and inflation. But I think that's going to be a key risk in the second half, as we've seen mentions of inflation and wage pressures and supply chain issues really skyrocket on earnings calls as well. So potential risk for year end, and then for 2022, we're only looking for limited upside to the market from current levels with a 4,600 target on the S&P for year-end 22.
Jill, staying on that 4250 target, is that a target that is hit over the next 6 to 8 weeks because of a Fed meeting, because of earnings season, and all these potential negative developments that could unfold?
Well, look, I mean, as a strategist, we're asked to sort of peg where the market ends the year at year end, December 31st. But I think, in over the course of the coming weeks and months, there are a number of risks. Obviously, COVID is one of them, but, interest rates, the Fed, all of this is something that we're watching closely. One thing we've pointed out is that the interest rate sensitivity of the S&P 500 is extremely elevated right now. You have a lot of, long equity duration stocks, so to speak, so stocks that are sensitive to interest rates. A lot of these, big mega cap growth stocks that are a very high concentration of the market right now and more sensitive to interest rates. We're of the view that the rates are more likely to go higher rather than lower from here. And, so within the market, we would stick with areas that we think could be, better positioned, even though we're not suggesting upside to the overall S&P 500 for year end. There are still some areas within the market that we would be more positive on, inflation protected yield being one of those areas. So within the S&P, stocks that have healthy and growing dividends and are better positioned as inflation rises. So with some of the more inflation oriented sectors, energy, financials has healthy dividend growth, even parts of, real estate, materials, et cetera.
And Jill, also small caps. And are small caps, do they tend to be more weighted towards those areas you're talking about, or why do they tend to be maybe more inflation resistant?
That's right. Yeah, we've been bullish on small caps relative to large caps. And, for what we were speaking about earlier, we're still positive on U.S. economic growth, and small caps are more tethered to a bullish U.S. growth outlook. They're more tethered to services spending. Their sales are more tethered to a CapEx pickup in the U.S. So we are starting to see signs of, better CapEx spending by U.S. corporates that could be furthered by an infrastructure bill, as well as, kind of the multi-year theme of reshoring of U.S. manufacturing with all of the, supply chain shifts that we've seen. COVID, U.S.-China trade tensions have obviously furthered this. And, one of the other interesting things that we found is that are valuations for the market. Obviously, they're a bit extended across the board for U.S. equities, much more so up the cap spectrum in large and mega caps. But for small caps, they're still trading at a historical discount to large caps. And while valuation doesn't always necessarily tell you much about what's going to happen to the market over the coming days or weeks or even months, it does have a very high explanatory power on returns over the next decade. So if you're a long-term investor, one interesting thing we found is that, for the first time, our long-term valuation framework is suggesting that the S&P 500 large cap benchmark could actually see negative annualized returns over the next decade. But for small caps, that's not the case. So our framework is spitting out, a positive mid to high single digit annualized return forecasts for small caps. So if you're a long-term investor, this might be a better area to tilt to for better annualized gains.
Jill, how large a risk is it to that small cap call that we could very easily get higher corporate taxes? That debate has resurfaced here to kick off this week. How big a risk is it to U.S. focused companies that they may have to pay more on their already minuscule profits out to the government?
Right. Yeah, I mean, this is certainly a risk for equities across the board. So, there's obviously various components to President Biden's tax plans. Higher corporate tax rate could be more impactful to some of those U.S. focused companies, as you mentioned, within both Russell 2000 as well as even within the S&P 500. Whereas on the flip side, some of the other components of the tax plan that would be more targeting to international companies could hit some of those areas that you see within the mega caps. So higher taxes is one risk to the earnings outlook for next year. The trajectory of COVID cases will obviously be another risk, since small versus large cap performance has been relatively correlated with that. But if we do start to see a better backdrop in that regard, I think given the bullish themes for the outperformance of U.S. growth relative to other regions, it could be a good multi-year backdrop for smaller stocks.
We will keep an eye on it. Jill Carey Hall, good to catch up with you of Bank of America. Thanks so much. Appreciate it.
I want to turn to a company that is giving Wall Street a pretty big caffeine jolt today in its market debut. We've got shares of the Oregon-based coffee chain Dutch Bros up a whopping 60%, 60, in their first day of trading on the New York Stock Exchange. Now, the stock was initially priced at $23 a share. And that was at the high end of expectations, by the way. Joining me now is Joth Ricci, President and CEO of Dutch Bros. And we're also joined by Yahoo Finance's Brooke DePalam. Thanks so much, guys, for joining us. So first off, congratulations, Joth. You started at humble beginnings. This company started out selling coffee from a push cart in a small town in Oregon to going public on the largest exchange in the world. Just tell us what that journey's been like and what today means to you and the company.
Oh, what an amazing day, right? I mean, just the culmination of 30 years of hard work by thousands and thousands of employees and people across the western half of the U.S. that have really built Dutch Bros and really put all of us in this spot that we're at today to get the response that we got, to be able to tell a great story. And it's not just our employees, but also our customers that have been with us all the way through the years.
And right now, Dutch Bros is in 11 states. I'm on the East Coast, and I'm just waiting for it to come here. So with this extra capital in hand, do you intend to make your way to the East Coast?
We'll continue to grow. We've been a very disciplined growth company from the beginning, and I think the disciplined strategy we put in place for growth, I see us somewhere on the Eastern Seaboard in the next maybe 3-4 years, and we'll see how far north that gets.
Joth, I know I was looking at some of your numbers, pretty impressive. Sales up 27% last year to over $325 million, but profits are thin, just about $5.7 million. I guess that's a reflection of just how much you're pouring back into the business. But what kind of insight can you give us on that profit number?
Well, a lot of just cleanup overall related to some debt and some there was some employee compensation in there as well, but really that's really more looking to the past than we are really looking to the future on where profitability is heading for the long term.
And Joth, right now there are about 471 shops across the US. A majority of those are franchise owned. Now we've seen staff shortages hit, as well as wages hit all fast food chains across the US. How are you strategically working with your franchise owners to make sure that it doesn't hit hard?
So really our franchisees have been an important part of our business from day one. Over the last 3 years, we've really accelerated our company-owned shops. So we're almost at about 45% company-owned now and 55% franchised, and most of our new locations in the future are going to be company-owned. We certainly aren't immune to some of the market challenges related to hiring. However, I think we've gone from what I tell people kind of a great situation in hiring to good. I think a Dutch Bros position in any market is a badge of honor for somebody in the part-time labor pool, and really probably the best job you can have in a market. So we've done really well on that end. We haven't had the challenges that we've seen other people have, and as long as we keep our culture right, we focus on our people, we focus on the chemistry that we have within our stands, and delivering that service, we feel like we're in a pretty good place on the labor end.
So Joth, I know you have a pretty devoted fan base. Your loyal customers refer to themselves as Dutch Mafia. How do you plan to build on that momentum and take on the established chains, as you move across the country, chains like Starbucks, like Tim Hortons and Dunkin'?
Yeah, a couple ways. One is, remember, we're 30 years old and really have been in with Starbucks all along the way. 2 Pacific Northwest brands, really growing, and I think in most markets that we're in, we're probably a half a mile to a mile away from any trading area that's been developed by Starbucks. As we continue to grow, I think one is that our rewards app, we've had over 2.7 million people sign up for our app since February 1st, and I think that's a really good indication of, as we've gone into new markets and have people sign up and be part of the loyalty that is Dutch Bros, they get to experience the brand and some of the ways that we reward them for their continued support. 2 is that we have to continue with our service model. I think that the big difference for Dutch Bros is that we're a beverage company, but we're really built on the backs of our people and the service that we provide every day in our stand. So we maintain our culture, we maintain our service, we maintain the great people program that we have, our people systems. I think we're going to do really well, and that's been the case for this company for 30 years, and we believe it's the case that we'll take forward for the next 30.
And one aspect that's also unique to Dutch Bros is that Blue Rebel energy drink. There's not many energy drinks at other major coffee chains across the US. I know that those account for about 24% of your sales, actually more than the hot coffee and cold coffee individually. So how exactly do you see the energy market moving forward, that energy drink? Will it continue to be a big piece of your portfolio?
I believe so. I think energy's been a big part of our program for the last 15 plus years, and what Blue Rebel's done is it continues to grow at double digits every year. I think that energy market is a big market when you think about what happens in convenience stores and grocery stores, and how broad the Red Bull and Monster and the category that those companies have created, and the brands that have been created. I think there continues to be a great opportunity for us in energy. We also serve it the way you want it. So you can flavor your energy, you can put it in a slushy type drink, you can put it in an iced drink, or you can just drink it straight up. And I think what's fun is the customization of what we do with energy is, I think, really a unique proposition for us.
I'm anxious to try it, Joth. You got to make your way over to the East Coast. I want to just ask you about. Sounds good. Well, we're happy to try it. I want to ask you, though, about the unusual stock structure with this IPO, because I know that your co-founder and chairman, Travis Boersma, I hope I'm saying his name right, Travis Boersma.
You said it great. Yep.
Great. He controls 74% of the voting shares, and that gives his shares a much larger voice than, I guess, common shareholders. Why did you guys decide to structure it that way?
Well, I think Trav and the family and the Boersma family have been such an important part of the growth and what this company's all about. It's been built on their backs, and we really felt like it was a great indicator. If I'm a shareholder and I know that Trav has control, and what this company's been built on and what's important to this business, I feel really good about Trav having that level of voting ability, and know that having him and his discipline and his feeling about people and culture and community and what he does for people, I like our chances with him in the position that he's in.
And Joth, I do want to note very quickly, Dutch Bros is also very mission oriented, very focused through Dutch Love Day in February. As you make this public debut on a larger landscape, how do you hope that mission moves forward?
Oh, I hope we can continue to share our philanthropic efforts as we've done for 30 years, continue to grow that and expand that. I think that Dutch Love, our Drink One for Dane, which supports ALS, and then we just did our Buck for Kids program on Friday of last week to support local children's programs in every market that we're in. One of the pieces we're after is to make a difference in our community and for our customers, and we think the philanthropy that we have is one of the cornerstones of what we're about.
I'm taking a look at the stock here, and it just keeps going up, Joth. I mean, now it is up 66, almost 67% here in its Wall Street debut. I mean, I know hindsight's 2020, but do you think, I don't know, maybe we could have priced this thing a little bit higher?
Oh, I think you can always say that. I think everybody who's lucky enough to be in this position can say that, but I think honestly, we're lucky and just privileged to be in the position that we're in and just super excited and going to enjoy the day. I mean, we know people have high expectations on what we're going to do, and maybe this is an indicator of the excitement around the brand, and we're excited to deliver that for people.
Well, you're certainly off to a pretty good start. Joth Ricci, President and CEO of Dutch Bros, and of course our own Brooke DePalam. Thanks so much for being with us.
Investors are also keeping a close eye on crypto. We want to take a look at Bitcoin because Bitcoin under a bit of pressure today, still holding above 47,000 right now. But we want to get it over to Dani Romero, who's joined by two special guests. Dani?
Thanks, Shauna. In the world of cryptocurrency, FTX US, the US arm of the world's biggest crypto exchanges, has partnered with Shark Tank investor Kevin O'Leary as an official ambassador. And joining us with more on this partnership is Kevin O'Leary himself and Brett Harrison, president of FTX US. Thanks so much, guys, for joining us.
Thank you.
Thanks for having us.
And Kevin, let's start with your deal with FTX. What was your thought process there, and why FTX US, and does it solve your compliance problems?
Yes, it does. I don't endorse products or services that I don't actually use. I eat my own cooking. I think that's important. I have been trying to solve this compliance issue with my own internal compliance department, my external auditors, and of course the regulators for quite some time now. The truth about crypto and the opportunity as well is that it really hasn't yet been adopted by large institutions the way people think. And the number one reason for that is not lack of interest. They want to allocate Bitcoin, Ethereum, et cetera, and many other tokens, coins, change, whatever, but they don't have the infrastructure to report into their systems. It's that simple. When you buy a stock or a bond, let's say you're running $1 billion mandate and you want to allocate 10% into a portfolio of crypto, that's $100 million. You don't download an app on your phone and do that. You have to have it built into the infrastructures that marks to market by the second, like a stock or bond does. Your compliance department can see your position every second. At the end of the day, reports it to your external auditors. They sign off on your statements, and it goes off to the regulator. There is no infrastructure for that yet. So FTX is the largest and has the most invested in building out what I call institutional grade compliance. So I've been able to do that. I've been able to structure a situation where I can manage now my own portfolio on an FTX, and I'm starting to build up from a 3% weighting up to 7% in my operating company by the end of the year, and I'm going to be using FTX to do it. So I feel very comfortable endorsing this product for what it does, provides as a service, and how it can help someone like me and thousands of other institutional players solve for this compliance problem. It boils down to, I get the best service, I get access, all that, but it's compliant. And that is what I have to care about first.
And was the deal paid in dollars or in crypto? And I guess I know you mentioned a little bit about your portfolio. So what does that really look like now?
Well, actually, I didn't want to be paid in dollars. I want the smartest guys on the trading desk at FTX to tell me what I should own. It's that simple because they get to look at a lot of different products from all around the world. I want crypto. I want to have an allocation of around 7%. And I don't want it to be just in Bitcoin. That's not diversified enough. So I'm building a portfolio with them now, deciding what I want to hold. And I've decided going forward, I'm going to disclose and be transparent on the percentage ownerships of what I own. And I think that's very important because one of the things I get concerned about is I have millions of followers. I don't want people to think that I'm buying things and then promoting them. I'm going to disclose what I own and why I own it, why I think the merits of each of these positions are on a monthly basis. I'm really, really interested in DeFi. I think it's disruptive. It's going to be much less friction in the costs of all kinds of services. You know, just my FX costs of the largest market in the world is currency. When I want to buy a Swiss stock or a European stock in euro or British stock in British pounds, I've got a trader in front of me clipping me for bips every time, both ways. I detest them. Okay, sorry, those words are too strong. I don't like those guys, and I want to get rid of them. And I'm hopeful over time. They had no value. They had no value, and that's just one use case of what the future holds for decentralized finance. And I think FTX is at the fore of all that. And why wouldn't I want to be associated with a player like that? It makes total sense for me. And for me, it's to be that dialogue with the institutions that I talk to every day about how I'm tiptoeing into crypto.
Yeah, and Brett, onto that point, I know that you're planning on entering, crypto derivatives and, expanding your user base. Where is the company on that?
Absolutely. So as you may know, recently FTX US, which is currently a regulated spot cryptocurrency exchange, we trade around $200 million a day of spot crypto volume on the exchange. We recently acquired LedgerX, which is a CFTC regulated derivatives exchange and clearinghouse, which is going to give us the ability in collaboration with LedgerX and also in collaboration with the CFTC, who regulates derivatives in the US, the ability to offer crypto futures, crypto options, and other kinds of futures and options to our customer base. And we're really excited about this because, of course, crypto is immensely popular, but not many people know that more than half of all crypto-related volume globally trades in derivative products like futures. And what we want to do is bring that volume onshore onto the US within the regulatory envelope of the CFTC in a way that's available easily and safely, reliably, and in a compliant fashion to institutions and to retail customers.
And to that point, are you concerned of any of these regulatory crackdowns, especially that have occurred with DeFi?
At FTX US, we have found through our many different conversations with regulators, the SEC, the CFTC, that their door is open and they want us to walk in through the front door and talk with them about what we're doing, how we can work with them to be compliant with the regulations that they want to create and have already created in many circumstances, to bring these products, again, in a safe, reliable way to consumers in the US. And through those conversations, we found actually they are quite open-minded. I think that there's this misconception that the regulatory agencies in Washington just want to clamp down on all innovation in crypto. And it's just not true. What they want people to do is to work with them openly and collaboratively to make this happen. So at FTX, we're not concerned. We're very excited about these ongoing discussions that we're having with the SEC and with the CFTC.
And Kevin, what is your thought process in terms of the infrastructure bill, the taxation, the regulatory debate that's going on? What do you see happening?
I'm actually very pleased that the regulator is getting far more involved. We've obviously had a bad press in the last couple of weeks regarding their role with some of the players in the industry. But the truth is, innovation is being created through decentralized finance. They know that. The US should lead that. They should pioneer it. They should lead it. They should invest in it. That's not lost on the regulator. The best analogy I've used for this is I love to watch Sunday football. I watch every game. I go into my man cave and I watch it. Those players can't play unless they know the rules. They have to know the rules. There's so many people that want to play that don't know the rules yet, and it's the job of the regulator to provide those rules and the rule book, and they're going to do that. And so I'm very, very pleased with the innovation that's been coming. I know we're going to get it right. The amount of buying, you got to look at it from the upside. If all of a sudden the rule book was published and the regulator made the rules up from NFT through to derivatives to futures to coins to chains, and all that stuff was settled, then all of a sudden you would have trillions of dollars of buying coming into this market. And that would be great for every participant and great for competition and great for services. And maybe I can get rid of those FX traders while we're at it. So, the way I look at it is this is all good. And just because there's friction and a little volatility and some positioning, it's not true that the industry wants to go to war with the regulator. It's far from that. It's like Brett said, everybody wants to talk to them and find out what the rule book is so we can play ball.
Totally agree. This is such a positive sign that this debate's happening in Washington right now. It's definitely shown us that the senators on the floor, they want to be educated about this. They want to craft legislation that helps encourage innovation in the space and responsibility. We believe that crypto exchanges like FTX US should be able to report taxes to the government, and that's to the IRS, and that's totally reasonable and normal. We want to make sure that we craft this legislation such that it encourages innovation for players in the crypto space and in the DeFi world.
Well, such a great conversation. Thank you so much, Kevin and Brett, for joining us.
Casino stocks such as Las Vegas Sands and Wynn remain under significant pressure on fears of tighter regulation by the Chinese government. Las Vegas Sands alone has lost nearly $5 billion in market value so far this week, according to Yahoo Finance Plus data. So what's next? Ben Lee is a managing partner at IGamiX and is based in Macau. Ben, good to see you. Good evening to you over there in Macau. Look, I think a lot of investors were blindsided by this news this week, despite all of these casino companies warning about China government risk in their annual reports. My question to you is, what's likely to happen next?
Good evening, Brian. So basically, now that we've got the new concession tendering process underway, and I must stress that it's not a renewal, it's actually a new process. This consultation phase essentially triggers basically the process by which we will then put in place the new legislation for the new concessions. They will then award the tender. And technically, it is viable and feasible that we may see the outcome of the new concession tendering process done by before the middle of next year, before the expiry of the existing concessions.
Ben, this is Emily. Thanks so much for joining us on this. And I'm wondering, assuming that this new concession tendering process actually does get approved and moves ahead next year following this public consultation period, if you're an investor in a Las Vegas Sands or a Wynn, based here in the U.S., what does this mean on just a sort of, practical basis for your investment in these companies with operations in Macau?
So for a long time, I believe most of the investors were lulled into a false sense of security in that, they were led to believe that being American stocks, being American operators, they are untouchable, and that because they've had such an outsized presence in Macau, that, their removal or ejection may result in massive disruption. But, the decision we believe here in Macau is that the decision is not with the Macau partners, but essentially up north in Beijing. And the drivers for this particular outcome is more than just the local impact. It is a geopolitical issue. Now, the relationship between China and the U.S., as we know, have deteriorated into quite a fractious one over the last 4 to 5 years. And the concession tendering process was actually supposed to have started about 2 years ago, but it was put in abeyance, and we have had no information about what's going on. And I believe that it was possibly due to the fact that Beijing wanted to see the outcome of the last election. They may have thought that the relationships would have improved with the U.S., but it is what it is. Things have not really improved. And I think the decision has finally been made not to keep this issue in postponement anymore, but actually to trigger it and let it run its course.
Ben, is there one casino out of those ones we just showed on screen, is there one that is better positioned to survive this and come out the other side?
You would have to look at the local players versus the foreign operators. So when the original concessions were granted, there were only 3 concessions, out of which the Americans, the foreign operators, only obtained 1, which was Wynn. Now that was a 2-to-1 ratio. Fast forward to today, we've got the sub-concession, which may or may not be legal, and the gaming academics and lawyers are still debating that. And the Americans have ended up with 50% of this dominant industry in the Macau landscape. So this is the first opportunity for China basically to reset the table here in Macau. Now, so with that in mind, you got to look at the 2 parties. You've got the local operators, and you've got to look at the foreign operators. So the local operators would probably be, you probably rank them in terms of their relationship with the Macau government, and more importantly, with Beijing. And then you've got to look at the foreign operators, what they have done in Macau, any history they may have had with the Macau government in Beijing, and how that would stand them in state. So in terms of favorites, I'll probably be putting Galaxy as my local Macau favorite. Now, in terms of which foreign operators are likely to be at risk, there'll probably be Wynn and Sands because of their previous relationship with President Trump. And there are a couple of other issues as well, which I can't go into here.
Is it highly likely, Ben, that the U.S. casino operators just won't be operating in Macau anymore?
There is always that scenario, and I think that has never been priced into the value of the stocks. There are 3 possible outcomes. One, they get a new concession and they get to remain in Macau. 2, they don't get a new concession and basically everything reverts back to government under the terms of the old concession. Or 3, which is probably a compromise solution, and that is for the American operators to be diluted out. They can still probably have the management rights to the gaming, but they may not necessarily have majority control. And I think that could be a possible compromise solution in a final wash.
I'm wondering, Ben, is this space overall, the Macau gaming space, still investable? And if so, is now the right time to go in now that we have had this rout in so many of these major names? Because already there has been a lot of pressure on the industry with travel constraints and the pandemic. So what is your overall expectation for this recovery?
So in the short term, in the next 12 to 18 months, the recovery is likely to be very, very slow because Macau has a zero COVID strategy, and which has been very, very successful to date. What we look for in the long term, and this is a scenario that we actually dive into last year, is that there are moves afoot to possibly introduce the digital renminbi as Macau's default currency. So I don't know if you know, but basically the default currency in the casino here in Macau is not our local currency, which is the patakas, but the Hong Kong dollar, which is freely convertible and exchangeable. And that in itself is an issue. So if the Hong Kong dollar is replaced by the renminbi as a default casino currency, that essentially would allow China to maintain control over the transfer of funds from mainland China to Macau. It basically would bring the whole of the Chinese market into Macau as a domestic mass market, something which we've never really had. And that basically is our blue sky scenario, if and when that happens.
Ben, I have to say, you probably just helped millions of investors on the Yahoo Finance platform right now understand this very complicated situation that appears to continue just to rattle these stock prices. Ben Lee, Managing Partner at IGamiX, good to see you. Appreciate these insights.
Thank you.
Storied business publication Forbes recently disclosed plans to go public on the New York Stock Exchange. The 104-year-old publisher will merge with a SPAC called Magnum Opus, putting the company at an enterprise value of $685 million. While While you may know Forbes for its glossy magazine, of course, they are known for many other things, such as newsletters and the 30 under 30 list. Let's welcome in Forbes CEO Mike Federle to talk a little more about the company's debut. Mike, good to see you this morning here. So what's the pitch to investors?
Yeah, thanks, guys, for having me on. Good to see you, too. The pitch for investors was pretty simple. It's a strategy of what we call closing the gap, and that's the gap between our enterprise value and this much bigger brand value that we have. And the way we're going to do this is through consumer conversion in terms of converting this very large digital audience that we have built into segmented audiences that we can then sell very specific subscriptions and memberships and products to.
Mike, why do you think that gap exists? Because that was interesting, an interesting note you put in the investor presentation, the gap between the brand value of Forbes, which has been around for some time, and the enterprise value. Why do you think that exists?
Yeah, well, Forbes, I've worked on dozens of brands in my career, and Forbes is really a remarkable brand, very unique in its brand elasticity. It has potential to reach and really make an impact in audiences across a lot of different categories. If you're to ask 100 readers of Forbes what it means to them, you might get wealth, power, business, investing, rich, luxury, all these different terms. But it really distills down to success, and the word is success. And wherever there's an emerging business class around the world, there's an opportunity for Forbes to go in. And we've done just that with about 40 licensees around the world. And so as a result, our brand has this really gigantic outsized value to it that now our goal is to make the business to be as big as the brand.
Hey, Mike, it's Julie here. I believe you guys put your content relatively recently behind a paywall. Can you talk to us about that decision and how many paid subscriptions you have and how much you expect that to drive revenue?
Yeah, we actually, we experimented with a very limited meter to paywall. And this strategy, I should say right up front, is not a hard paywall strategy. We are big believers in the ad market, and the ad model is going to continue to grow. And as we add data and analytics, our first-party data platform, we're able to increase the value of that advertising. So we're bullish on advertising going on. But what we're doing is not a hard paywall, but creating these premium products and experiences. And this is going to be driven by, again, the data and analytics that we're able to produce as we begin to segment our audiences. And we've already begun to do this, and we've already begun to see good results on it. In terms of your question of number of, we have tens of thousands of subscribers, but that's really on this limited paywall. And that's really, again, was more of an experiment to see how we could begin to segment certain sectors of our audience and create that subscription revenue from kind of an old model subscription of just a paywall.
Gotcha. And speaking of old model subscription, we were just showing the stats that you guys have 500,000 paid print subscribers, which in this day and age is an impressive number. Do you expect that number to stay where it is, considering we're sort of seeing the secular decline of that kind of a business?
No, it's interesting as you talk to people around the world, again, a testament to the brand is people will often refer to us as a magazine company still, and that's great. The magazine remains an important component to our mix, but it's only about 10% of the revenue. So we're 90%. We've made this digital transformation. We have created this digital media and information company of scale. And now we're at an inflection point that we're ready to go to the next step, which is really to develop very specific audience cohorts and and customize our product and experiences to those audience cohorts based on what we know about them. As far as print goes, I don't see that changing a whole lot. We have been very smart and unnostalgic about right-sizing that business so that, you know, that 500,000 is down from probably a peak of 900,000 or so. But there remain a lot of interesting people, or people interested in receiving the magazine and our information in that format.
Mike, I don't have to tell you this. So there's been a lot of consolidation in the industry of late. You have Politico, you have the tires being kicked on Axios. Once you are public, do you view your platform as an acquirer?
Yeah, certainly we'll be looking at that. What we have, our premise to investors and to the street is this consumer conversion strategy. Again, we already have the very top end of the funnel, this very large 150 million audience across Forbes ecosystem. And so the investment thesis is more about making that conversion and having this additive new revenue stream on top of the very successful ad model that we have. But going forward, I mean, we're well positioned in a consolidating marketplace to take advantage of opportunities as they come up, and we will do that as well. And there are always opportunities out there.
Well, certainly looking forward to covering and following your public company journey. Forbes CEO Mike Federle, good to see you. Have a great weekend.
Thanks, Brian. Thanks, Julie.
Well, new cryptocurrency could help budget shortfalls in the city of Miami. On Monday, the city's commissioners approved a plan to accept crypto donations made through crypto mining platform CityCoins. The currency, known as Miami Coin, has generated more than $5 million for the city in just a matter of 40 days. Let's bring in the mayor of Miami. We've got Francis Suarez joining us today. Mayor, great to talk to you again. I guess just as some background here, it's important to note that every time somebody mines a Miami coin, the city gets a 30% donation. You've said you've seen that number tick up pretty quickly. Why go this route?
Well, we want to be the most innovative city on the planet. And we also realize that for us to get there, we have to differentiate ourselves. We're not the Goliath in this equation. We're the David, and we're quickly growing in terms of the amount of venture capital and the amount of assets under management financing firms that are coming down and moving down in Miami. But we identified crypto as an area where we could really show how innovative we can be as a city. And so, we're the first city to begin the process of paying our employees a percentage in Bitcoin, allowing our residents to be paid in Bitcoin. And now with Miami Coin, what we're doing is potentially creating a currency that a percentage of the mining is automatically going to the city. As you said, it's going to redefine how cities are funded. It's not an involuntary tax. We're not relying on philanthropy. This is part of a protocol that anytime a Miami coin is mined, a percentage goes directly to the city. And the amount that it has generated is incredible. It's generated, I think it's $2,000 every 10 minutes at this particular pace. $5 million in 30 or 40 days, that could generate $60 million over the course of a year. And if this gets, continues to be successful and grow, it could pay a significant portion of our budget, which is something that has never really happened in the history of cities.
And Mayor, I wonder if you can elaborate on that a bit more. There's obviously the innovation element to this. We know you've been out front very publicly trying to really get the city to be at the forefront of cryptocurrency. But I wonder how much of this was actually born out of need because of some of the budget shortfalls that Miami's faced. Does it provide a cushion? And if that's the case, do you see other cities following at a time when they're also struggling with their budgets on the back of what's played out during the pandemic?
Well, I can guarantee you that other cities are going to want to copy this model. In fact, I know I've gotten calls from mayors, even from cities in Silicon Valley, that have said, we can't believe this. The mayor of Miami is creating his own currency. But I think what's great about it is that it's providing real world benefits to our residents. The money that's generated, we hope to be able to put into educational opportunities for our children to be able to get the jobs that we're generating. We've generated 8,000 jobs with an average salary of 120,000 in the last 9 months alone. We can pay our police officers, our firefighters. We can do anything within our general fund budget that we need resources for. And like I said, as the market cap of Miami Coin continues to grow, the amount of resources that it's going to generate will as well. And it is never happened this way before. And so I think this is going to create a national model that people will look at as a different way of funding our government.
Yeah, Mayor Suarez, it is interesting to watch all of this play out. And the funds here, it sounds like it's going to be, sold into dollars when the city plans to tap it and use it. So, there is that in terms of restrictions still being restricted to dollars. When you look at kind of the attraction, though, beyond the money bringing it in, as Akiko's kind of talking, attracting companies to Miami. I know blockchain.com, when we were down there for Bitcoin Miami over the summer, they announced they were shifting half their headquarters to Miami. I mean, what have you seen in terms of new companies relocating down there, specifically in the blockchain space?
Wow, we've been so many. Like you said, blockchain.com, you have eToro, you have XBTO that just recently moved to Miami and and actually took the naming rights for Inter Miami soccer team. Of course, famously FTX, which did a $200 million deal to rename the arena. So we've seen such a movement. Like you said, the Bitcoin conference, which came from LA and is now in Miami, is one of the major, Bitcoin conferences. But we haven't just seen crypto companies, we've also seen finance companies. And just this week alone, CI Financial, enormous investment management firm out of Canada, moved to Miami, $300 billion of assets under management. So this narrative of the new Miami and a city of innovation is one that is becoming a reality more and more as you see the pipeline of deal flow growing by a large factor, and you see big finance companies moving as well.
Yeah, I mean, it is interesting because you guys are obviously very progressive and on the cutting edge here in the States, but the state of Florida, at the state level, we've heard maybe some pushback from Governor DeSantis when it comes to kind of vaccine mandates. And I'd be curious if that's kind of weighed on maybe some of that, and particularly you as mayor, the threat from him to fine local governments $5,000 for each time there is a violation of that vaccine mandate at the local level. I mean, how much pressure does that put on you as a mayor in Miami?
One of the things that we've done very successful in Miami is actually get people vaccinated. I was looking at a statistic this morning. It was almost hard to believe that 98% of our eligible population has received at least one shot. And so, we are heavily vaccinated in Miami. It's part of the reason why now, thankfully, our numbers are coming down significantly. But, we do see, and I have said this many times before, this is a pandemic of the unvaccinated, right? I fought very, very hard with the, alongside private companies like Norwegian Cruise Lines and the cruise industry and Disney to fight the state's efforts to impose on those private companies an inability to make sure that their passengers and their employees are vaccinated. And so, I think that those kinds of things where the government is telling the private sector what to do are not things that are helpful to private enterprise. And I think that private companies should have the right to be able to protect their employees and their customers.
Mayor, let's talk about something else you've been very outspoken about, and that is climate action. You've been a big vocal proponent of it, not just working with mayors in the U.S., but leaders around the world. And yet there's growing concern about the carbon footprints of cryptocurrencies, and particularly the use of energy that's required to mine crypto. What do you say to those who say that your embrace of crypto and this push for it runs counter to some of the other actions you are pushing for in trying to rein in the carbon footprint?
Well, I would tell them to do their homework because first of all, a lot of the ESG concerns of miners has to do with the fact that the large percentage of mining was happening in coal-producing countries like China and Russia. What we saw with China shutting down mining is actually a lot of that mining coming over to the United States, which is being done predominantly by ESG compliant companies. In fact, Core Scientific, which is the largest Bitcoin miner in the United States, is carbon neutral. It's a carbon neutral Bitcoin miner. They get hydroelectric power and they pay for offsets. So they are completely carbon neutral. So, the mining companies in the United States are very conscientious of ESG concerns and are making sure that to the extent that they are mining, they're doing it in a responsible way vis-a-vis the environment. And that's why I'm so excited to see America getting more involved in mining, because we're doing it the right way as opposed to other countries that are doing it the wrong way.
And of course, there are those who say that mining will actually be supportive of the expansion of renewable energy. So both sides to that debate for sure. Mayor Suarez, it's always good to have you on. Really appreciate the time today.